Welcome back to CMQ Investing. My name is Chris Franco. I want to talk to you about the latest Berkshire Hathaway Shareholder Letter. Every Berkshire Hathaway letter, in some ways, is a treasure. I've learned so much from reading these letters over the years and really thinking about them. And I want to share with you what I believe are some of the best lessons that we can apply, that we can use to our advantage, and hopefully make some money as a result. Beyond making money, it just helps you think more clearly about what it is we're trying to do. And that is find great businesses that we can own a piece of and hold for a very long period of time and build wealth that way.
The investing where you find a few great companies and just sit on your ass because you've correctly predicted the future, that is what it's very nice to be good at.
CMQ stands for Compound Money Quietly, and if you've yet to subscribe, I hope you'll take a quick second to do that now. I upload content to try to help all of us do better than the average investor. The way that I've structured things is I'm going to read 7 different quotes that stuck out to me, explain them, describe them, and then at the end of the video, I'll summarize what I believe are the key lessons to take away that you can hopefully learn from and use to your own advantage. Our goal at Berkshire is simple. We want to own either all or a portion of businesses that enjoy good economics and that are fundamental and enduring. Within capitalism, some businesses will flourish for a very long time, while others will prove to be sinkholes.
I think we're going to see some spectacular returns.
And it's an important thing to consider when you're looking for businesses because we don't need that many great ones. If you look at the list of holdings that make up Berkshire Hathaway, and I'm not talking about the stock portfolio, I'm talking about individual businesses that they own all of. Names like Geico, Duracell, BNSF, NetJets, Clayton Homes, See's Candy, Benjamin Moore. Warren Buffett in this letter on page 4 said, "At Berkshire, we particularly favor the rare enterprise that can deploy additional capital at high returns in the future. Owning only one of these companies and simply sitting tight can deliver wealth almost beyond measure." An example of a company like this would be Apple. 2 other businesses that Berkshire has owned for a lot longer than they've owned Apple come up in this letter on page 8. Buffett writes, "Both Coke and Amex became recognizable names worldwide, as did their core products, and the consumption of liquids and the need for unquestioned financial trust are timeless essentials of our world." Now, I've taken this idea that Buffett has talked about many times, and really applied it. So for the businesses that I own, that I have pieces of in my portfolio, most of them are offering something that's timeless or essential. I call it enduring value. What they're offering is going to be needed or desired by consumers 30 years from now. And I can say that with a high degree of confidence. Now, there are very few things in life you can say confidently about the future. For example, are people going to want to buy high quality products at all-time low prices in the future? And I'd say the answer is yes. And Costco is a business that delivers that. It delivers this timeless essential. Now, you might be asking yourself, well, Berkshire has all this money. Why don't they go find more Amexes and go find more Coca-Colas or even Apples? But as Buffett writes on page 6, there remain only a handful of companies in this country capable of truly moving the needle at Berkshire. And they have been endlessly picked over by us and by others. Some we can value, some we can't. And if we can, they have to be attractively priced. Now, I want to focus on the first part of that. Berkshire Hathaway and the type of money that they have to do deals, they can't just buy, a little bit of a small cap or a mid cap. The idea that they've been picked over by us and by others is saying that they have to look at everything that everyone is already looking at or has looked at and made a decision on. And the Apple purchase back in 2016 is an interesting example of this, because at the time, the consensus, at least in Wall Street, Fortune magazine, for example, and people were pretty sour on Apple stock. Berkshire and Buffett and Munger, they saw something different, despite the fact that everyone else had picked through it, and they decided to make a move. Now, this next quote is a lot shorter, but it really is a great way to kind of think about what we're all trying to do in life. And it says that Berkshire benefits from an unusual constancy and clarity of purpose. And this is so important, I think, especially as investors, because there's so much noise. And if you don't have a certain diligence, a certain doggedness, a certain focus and direction, you can get pulled in any which direction. You get distracted, and it's very difficult to go anywhere when you have your mind and your thoughts diversified across, hundreds of different ideas. It helps to really narrow in. It's hard, but that's what it takes. Now, the market today, Buffett talks about that on page 7. He says, "Though the stock market is massively larger than it was in our early years, today active participants are neither more emotionally stable nor better taught than when I was in school. For whatever reasons, markets now exhibit far more casino-like behavior than they did when I was young. The casino now resides in many homes and daily tempts the occupants." Buffett continues by saying that One fact of financial life should never be forgotten. Wall Street would like its customers to make money, but what truly causes its denizens' juices to flow is feverish activity. I'm going to say that again.
Bring it back. Bring it back.
What truly causes its denizens' juices to flow is feverish activity. At such times, whatever foolishness can be marketed will be vigorously marketed, not by everyone, but always by someone. Now, despite all the constant frenzy and the change and the mania, Buffett writes on page 7 that one investment rule at Berkshire has not and will not change: never risk permanent loss of capital. And this not only does this speak to one of the very first public Warren Buffett interviews, at least on video, and I'll play a clip of that.
The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule.
But it also speaks to the idea of mitigating risk. Don't overdo it. Now, the things that we have working for us that Warren Buffett points out here are the same things that I talk about and have found for myself that are so advantageous to us as long-term investors. Buffett writes, quote, "Thanks to the American tailwind and the power of compound interest, the arena in which we operate has been rewarding if you make a couple of good decisions during a lifetime and avoid serious mistakes." And see, that's why CMQ stands for Compound Money Quietly, because it represents a fundamental truth about building wealth. And this other point here about avoiding serious mistakes, this was something that is just transformative in the way that I approach investing, which was I don't have to do anything right so long as I avoid doing all the dumb things that people are prone to do. And I'm saying that not because I'm not dumb, but because we're all dumb and we all have the tendency to be misled, especially when money's involved. So if you know what the big mistakes are and you can stay away from them, well, you put yourself in a lot better position. And this is a perfect way to conclude with one of the very last sentences in this letter, and that is that Charlie's wisdom will improve your life as it has mine. And what I just shared a second ago about avoiding stupid mistakes, it's very much a reminder of Charlie Munger's encouragement to invert, always invert. And I have to say that I'm pretty down in the dumps reading this letter now that I just think about that, because as much as Charlie Munger lived a great 99 years and he was only 33 days short of his 100th birthday, I have to admit that it is still kind of strange knowing that he'll never give us a new quote. But I will definitely be doing my best to help spread and share his wisdom, as it has been so useful to me, not just in investing, but in life more generally. So definitely recommend you check out this letter. If you haven't, hopefully this video gives you a good taste of some things you can do. Now let's recap on the bigger points. Lesson number 1 is invest in businesses with strong, enduring economic fundamentals and for long-term success. This idea never goes out of style. Invest for the long term. And if you want to invest for the long term, you want to invest in a business that's strong, that has enduring economic fundamentals, and has something, as Buffett said a little while ago that we quoted, a business that offers timeless essentials. Next is seek companies that can reinvest capital at high returns to significantly grow your wealth over time. Now, these kinds of businesses are hard to find, and especially hard to find at a great price. But the process of searching for great businesses, at least from my experience, will improve the way you think about businesses, and I think improve how you perform long-term as an investor. Go back to Charlie Munger, who in one of his final interviews, it was not an exact quote, but he said that, he's just been obsessed with looking for great businesses, all the way back to when he decided he wanted to take investing serious and was, as I said, coattailing with Warren Buffett. He got obsessed with the idea of just what's the greatest business you've ever heard of. Those are the businesses you want to get involved with, not just because they'll bring you money, but because they're just a lot easier to deal with. It's kind of a bummer to find businesses that are, falling apart that you have to turn around or, try to liquidate. It's not exactly an enjoyable life. Number 3 here is focus on valuable, attractively priced companies, even if they're very few and highly sought after. Kind of an echo to the second point, but something that was very critical that Charlie Munger taught Warren Buffett that shaped Berkshire Hathaway forever. Number 4 is invest in companies that have globally recognized brands and products that fulfill timeless essential needs. The globally recognized brands, I think, is undervalued or underappreciated by most of us. And I only say that because I come from the world of marketing and branding where, that intangible asset is so powerful. I've seen it play out in tangible ways when you have a strong brand versus when you launch a new product or a new brand. And, I hate to say you can't put a price on it, but it really is something special. And how many businesses that you look at, do you ask yourself, how strong is this brand? When people see this brand across the world, what do they think of? Next is prioritize profits over activity. This goes back to the quote about the feverish activity that Wall Street tends to, encourage. The more you do, the more you tend to lose. And what studies show about the behavior of individual investors is that the more that we trade, the more active we are, the worse we tend to do long term also. So, the less you do, the better you tend to do. So, all this kind of fits into this puzzle, or I could even say a lattice work. We're trying to figure out, okay, what are the few things that I need to focus on doing really intensely? And everything else you can just tune out. Number 5 is never lose money. Number 6, I should say. And number 7 is leverage America's economic growth and the power of compound interest over a long time horizon. And that's something you can do just by buying a low-cost index ETF like the VU by Vanguard. And that's not a promotion or encouraging you to do that, but currently 34% of my portfolio is in the VU. And it's been, not only has it made me quite a bit of money, but it's also been some of the most stress-free investing I've ever done. And number 8, which is a bonus, I'm going to put it on here because I'm feeling a little bit sad, is learn from Charlie Munger. And if you'd like to learn more from Charlie Munger outside of YouTube, check out my Instagram page, Charlie Munger Quotes. I don't update it as frequently anymore, but it exists to be a resource, to be an anthology, if you will, of of Charlie Munger's wit and wisdom. And I hope you get a chance to check it out and let me know what you think. Thanks so much for watching all the way to the end. Here's some more videos that I think you'll like. And if you haven't already, make sure you subscribe to the channel, and I'll see you guys again on the next video. Later.